Hello, everyone. Welcome to this masterclass about the stock market, hedge funds, and about this very special fund that we have for you. Thank you for joining us. My name is Simon Snowder, and our guest speaker is Richard Liddle. He is the CEO of Bowmoor Capital. I will give him soon an introduction to speak more about himself and about Bowmoor Capital and Global Alpha Fund. But I just wanted to reach out to you and say thank you for joining. You can ask any questions you have to us. You can also type your questions. The cameras are switched off, so we will not see you. Other people will not see you as well. And I just wanted to tell everybody that the recording will be available from this. It will be sent automatically to your email. I have a very quick presentation for you, a couple of slides just to make you understand if you're new, if you just came here for the first time, then you know, okay, this is what I can expect. So I am from a financial advisory background. So I've been working 10 years in this industry. I'm an investment manager, and I've been doing a lot of these webinars slash masterclasses for the past years. If you want, you can check me out on the internet and you can go to my website. This one will be also available there. A lot of different topics, a lot of different educational stuff. And I'm very excited about today because we will have Richard talking about a fund which has been outperforming the stock market. So, Richard, thank you for joining.
Thank you, Simon. Thank you for having me. Apologies for this halo effect that I seem to have on the background, but we'll bear with it. Obviously, with the Bowmoor background, I'm not sure why that's coming across on GoToWebinar here. But Simon, if you don't mind, there we are. I've got the sharing ability. I'll just share my screen, and it gives me great honor. So thank you, Simon. It gives me great honor to present to everybody here today, and I'm going to present to you about Bowmoor Capital and an event about what we are and what the fund is, myself and the team. Now, the reason Simon's invited me on here is really to talk about why and how we are beating not just the stock market, but pretty much any other asset class which is currently out there. And we have done so for quite a considerable period of time. We've been live as a fund since May 2013, so over 10 years. But Bowmoor's recently restructured, and Bowmoor itself is a new company. However, the strategy, as I say, is over 10 years old. And you can see the performance then giving an annualized return of over 23%. And with that, it's not only outperformed the market, but it's also enabled capital to be doubled every 3 to 5 years, which is one of our mandates. And we only trade 21 markets. So a little bit of an introduction into Bowmoor first, then I'll go into the fund, the team, and then we'll end with any questions. We'll look at performance along the way, and also a term called crisis alpha, which some of you may have heard of. And if not, I'll discuss crisis alpha and what it is and why it's very important to use an investor and also an allocation into your portfolio. But Bowmoor Capital is a London-based trend-following systematic macro investment fund. Quite a mouthful, but ultimately we're a quantitative investment strategy. Global Alpha is its name, and that's the name of the strategy within Bowmoor Capital. And it's been rigorously designed and developed since 2003. Going formally live in 2013. It uses sophisticated mathematical processes to identify and exploit major price trends in markets around the world by investing in a diversified portfolio of markets. And diversification is key because I speak to a lot of investors who over-diversify, shall we say, where diversification and using diversification in your portfolio is key, but over-diversification, like Warren Buffett very famously said about over-diversification, that it's simply an excuse for people who don't know what they're doing. You should invest heavily in areas that you fully and intricately understand. And we're dedicated to providing exceptional returns for our clients, as you can see by this slide here. And the strategies consistently delivered alpha across all sorts of changing market conditions. And we aim to deliver a double-digit net annual return, doubling capital every 3 to 5 years. We believe that our focus on a scientific and systematic process, as well as a commitment to following data gives us a strong competitive advantage, and it allows us to consistently deliver that performance. The team, which I'll introduce shortly, have over 50 years of combined experience developing and running these systems. Now, if we look at recent market data, recent events have shown more than ever the immense benefit of incorporating a strategy like ours, which is a managed futures strategy, into your investment portfolio. If we look last year, 2022, a typical investment portfolio consisting of 60% equities, 40% bonds experienced a double-digit percentage loss. A surge in inflation globally has resulted in declines in both equities and bonds, and similar losses have occurred during previous periods of high inflation and recessions, i.e. 2008. In contrast, Global Alpha returned 11.99% last year, but that contributed to our average of 23.37% since 2013. And we achieve that by investing, like I say, systematically in a diverse range of asset classes: stock markets, interest rates, currencies, energies, metals, and commodities. And I'll introduce those markets very shortly. And that allows our investors to achieve lower overall portfolio volatility, with Global Alpha complementing other traditional investments which you may have over a long-term basis, because we take long and short positions. So we're not just a long-only fund; we take long and short positions, and we can derive alpha from trends in both rising and falling markets, including times of crisis. And I'll show you some crisis times and how we performed in those very, very shortly. The strategy was designed and developed by our investment manager, Gareth Abbott. Now, Gareth's a mathematician by profession and passion, and he's a fellow of the Institute of Mathematics, and he's also been awarded many accolades in that field. Gareth has traded and continued with research in investment management over 20 years. And he started out his professional career in the City of London, heading up the derivatives desk for the likes of Duncan Duckett, Harmonic Capital, where he was instrumental in their 250 million AUM raise. He partnered with Bowmoor Capital and brought Global Alpha under our wing, which is where we sit now. The rest of the team that you see here consists of myself in the top left-hand corner. Now, I'm a former military officer. I spent 21 years in the military, both in the Royal Navy and the Royal Air Force. I was a helicopter pilot in the Navy, and then I transferred to the Air Force to become a fast jet pilot, and saw operational service throughout the globe. The likes of many of Middle Eastern countries, the Iraq, Syria, Libya, and Afghanistan, involved in many multinational operations. I took a career change on leaving, where I looked initially to go into fund management as part of the Barclays Fund Management Scheme for ex-military officers, which is a fast-track program that they run. But I decided to pursue a route into my entrepreneurial interests, and I set up a company specializing in providing developed buildings for vulnerable individuals in the UK, adults with autism, care leavers, disabilities, and raised over 500 million from real estate investment trusts. And it was that led me into the world of fund management and meeting the rest of the team. I have a single-minded focus on providing our investors with best-in-class returns with very low risk and long-term yield. Gareth I've already introduced. Like I say, he was a mathematician by profession and had over 20 years of experience in the city, heading up the likes of Duncan Duckett's desk and also hedge funds such as Harmonic Capital. He is what we refer to as the architect of Global Alpha and the designer of Global Alpha. He's teamed up with Brendan, top right here, Brendan Mulvaney on the trading desk, and Brendan is our head of execution. Brendan himself is an experienced head of execution with over 30 years of trading behind him. He started his career with Dresdner Bank and the Bank of America, specializing in derivatives and futures, and he led a highly successful trading operation at the forefront of the investment industry on the likes of the Life Exchange, Kite Futures, and Refco. The final two members of the team are Philip Salverson, who joined us very recently as our general counsel. Philip joins us as a lawyer from a large London firm called Kingston Napley, where prior to that he was at Withers, and he's worked closely with major clients in the financial services sector. And we brought him on really because of our regulatory status, and enables us to smoothly transition the regulatory hurdles that we find ourselves in. And by being heavily regulated, it gives confidence and assurances to our investors. Finally, we've got James. And I'm sure James would love to talk to every single one of you here as a potential investor. And he's got an extensive background in financial services, over 25 years experience in distributing and fundraising. And he joins us having significantly raised funds in the life assurance market and large mortgage operation. And he now heads up our distribution team, like I said. Now, I want to talk about what makes us unique. Why are we different, ultimately? And that's kind of what investors always want to know. Now, what makes us different to any other investment strategy, and why we really fit within every investment portfolio? Now, two of the things we talk about here is MECE portfolio construction. Now, MECE is a term that's been used quite significantly now, and it's mutually exclusive but collectively exhaustive. And what that means is within the 21 markets that we trade, it minimizes the correlation but maximizes the diversification. And simply put, the carefully selected markets that we have, which don't change, I add, give an optimal both number and coverage across the whole global economy. We're also liquid. Now, liquidity is very, very important, because I'm sure you've all been involved in some investment products where liquidity or lock-in periods may be 3, 6 months, 12 months, 5 years even. But liquidity, we're daily liquid, meaning you can invest money tomorrow and have it out the next day. We have full daily liquidity, and we can achieve that. Yes.
I'm sorry to interrupt you. We have some questions which I wanted to ask you straight away.
Okay.
I got 2 questions. The historical performance is backtested or live?
It is live. So from 2013, it is a live track record. Yeah.
And how much AUM? That's the second question I
Okay,
received.
so no, absolutely. So currently in the fund, we're running 11 million AUM at present in the Guernsey fund, which I'll introduce shortly. And then we're running a number of segregated managed accounts of around the 2 to 3 million mark. So we've got 3 of those currently running, 2 million, 2 million, 3 million. So they're segregated management accounts. So it gives investors both options, really, either to come into the fund, and there's multiple share classes within the fund offering different fee structures, which again I'll introduce shortly, or if the investor is large enough, we can do a segregated managed account for them.
Yeah. Amazing. Thank you. I'm going to let you carry on until the next questions come.
I know everybody wants to see numbers. It's always numbers. What is the performance? But I'll show you the intricate. We're very open about our performance, and I'll show you every single month's performance very shortly, and hopefully that'll clear up a lot of things. But like I said, liquidity. The only reason we can offer daily liquidity is because the markets that we invest in are the largest and highly liquid futures markets in the macroeconomic world. But again, I'll introduce those shortly. The other 3 areas are portfolio allocation, risk management, and market strategy. And like I say, these 5 areas are ultimately what makes us different from every other managed futures product. Portfolio allocation means that we have a 3-dimensional model, meaning that we are rebalancing our portfolio daily to make sure we're never overexposed in any one particular area. And that crosses into the strict risk management we have as well. We are very rule-based. Well, we are 100% rule-based. We are, as I said, we're 100% rule-based, non-discretionary. So we have no discretion over the investment. So we don't look at the fundamentals of the world or what potentially is going to happen. If the model, which is based on price and data only, tells us to buy a position in one of these markets, we will do so. And if you look back in history, there is over a 500-year record. Obviously, you look back at some of those markets where they were trading who knows what 500 years ago, but it goes to show that the trend is your friend until the bend at the end, as they say. And if you're following a trend, you're never going to get the bottom of a market, and you're never going to get the top, but you're going to get the significant alpha in the middle. And actually, by applying a 100% rule-based system and strategy, we can capture the majority of that move in all of these markets. As I say, we do not make investment decisions based on emotions, politics, media, or broker opinions. Our quantitative system uses the mathematical processes to identify and then exploit those major price trends across the markets. They're based on well-established and reliable trend-following methodologies and empirical evidence. And that's the key, is we are data-driven. We use elements of AI now, but it doesn't now come into the main investment decisions. We use it for part of the execution, but it's not fundamental. So at no point can we or the trading team make a fundamental trading decision. It is all done on the rules. The evidence that we gather shows that trends, like I say, are recurring phenomenon. They're recurring in the financial market, and they're as a result of behavioral biases, such as herding, feedback loops, overreaction, and confirmation biases. They happen time and time again. Like I say, so we don't attempt to buy at the absolute bottom or sell at the absolute top. We believe that it's impossible to do so reliably and repeatably. We capture the substantial middle portion of the market trend, up or down, for maximum repeatable profits. And we react to and profit from unfolding market trends and conditions. Hence why Global Alpha has produced an average annual return of 23.37 since 2013. Now, if we look at the markets that we are involved in, we can see them all listed here. And we cover all 8 sectors of the global economy in 21 markets. But this is the MECE construction. So we've got energy, currencies, softs, livestock, metals, interest rates, and grains. They're covering in energy, crude oil, heating oil, natural gas. In currencies, pound, Canadian, Australian. Again, look at that global coverage. In indices, we've got Euro stocks, we've got the Dow in America, we've got the Nikkei, a global coverage. Grains, interest rates, once again, 3 covering that. Metals, uncorrelated metals. Livestock, cattle and hogs, softs, coffee and cocoa. And they are the largest and most highly liquid futures markets. And they allow that MECE construction, that mutually exclusive, collectively exhaustive, where one market may well be running, others may be falling. But one market trend, one significant market trend, the way we apply our metrics, is sufficient to give the entire year's alpha. So for instance, this year we're already we're already above our average. So year to date now we're over 24% year to date. And that the majority of that move has been made in 2 of these markets, palladium and the hog market, the lean hog market. Other markets may well have been negative or loss bearing, but those 2 have had such significant trends, it's giving us the entire year's alpha simply by 2 market movements. Here's a little bit more granular data, and I'll go granular once again on the next slide. But year to date, they're showing 18.7 because that was done at the 1st of October. But like I say, we are now where we sit now. We haven't had the audit figures in for November, hence why I haven't put those up. But like I say, we are currently 24% year to date. The rolling figures for me are some of the more important ones. When you're looking at the 1 year, it doesn't look brilliant at only 6.29% because we had a down period at the back end of last year, which I'll show you very shortly. But looking at that rolling 3, rolling 5, and rolling 10, the rolling 3, like I said, our mandate is to double money every 3 to 5 years, which exactly has done that with that data. We look at the annual returns on the next line, and I'll come on to those in a little bit more detail shortly. And then the bottom line, the annualized figure is very, very key for me, that 23% annualized, because we are a longer term investment. And then the Sharp and the Satino for those people who like to utilize those as part of their investment decisions. And like I say, we're very open about our returns. And here is the breakdown of the monthly performance returns that we have seen. Now we look at 2023 Across the bottom that you see that here, 2023, and we could put in a September figure of minus 0.12 and an October figure, like I say, is 5.19, giving our figure here currently of 24.86. So 24.86, and we look across here, we've had one negative year that I can identify here and show you is 2018, but look at the alpha across the others. 3 to 5 years, remember, is the key for the horizon for this. It's not a short-term investment, and it is a volatile movement. Look, we've got a large minus 10% here, and we've got others of a minus 13% here. But we look at individual months, and we've got an up 14% in a single month, 14 again up here, and multiple double-digit months that you see across the board. But over a 3 to 5 year horizon, we will double investors' capital. Now, looking at this in comparison to, in fact, we'll come on to a graph very shortly, but I wanted to talk briefly crisis alpha. So what is crisis alpha? Crisis alpha is ultimately how we as a strategy perform in times of global and economic disaster. So if we look at two incidences of our recent history, so we could look at the COVID crisis and we could look at the invasion of Ukraine by Russia. And you can see here, the bottom two here, how we perform against the wider CTA index. So that's the wider similar investment strategies in our field, similar managed futures strategies, but also against the larger S&P as a benchmark that we're using. So it's the ability to outperform the other metrics in times of crisis. And where we do particularly well, and have been shown to do particularly well, are high interest rate, high inflationary environments. Hence, a large return that we're seeing this year, and hence the larger returns we are probably going to see in the next coming years because of the global macro environment we're in. However, none of our decisions are based on macro metrics. Like I said, we're 100% rule-based. But crisis alpha is something to intricately understand. Drawing that on a graph, like I said about the against the S&P, here is us against the S&P going back to 2013. So you can see we've significantly outperformed that as a benchmark. Obviously, people use different things as a benchmark, but this demonstrates it very well. The majority of global investors do refer a lot of things to the S&P. So I think this is a very, very good and illustrative graphic. Another graphic here is us plotted against the SocGen. SocGen is the Societe Generale, so the who are the major trackers of funds in this sector, the managed futures space. And you can see there again, Global Alpha being the blue line and the red and the black being the SocGen indices that they track. And why I'm showing you this is it shows that we significantly outperform others in our sector. So not only the wider market, not only the stock market, and not only other types of investments, but also others in our peer group. I think that's vitally important to understand. I use this graphic here, hopefully not to overcomplicate matters, but on the left-hand side here, you can see the 21 markets that I previously spoke about. And you can see how they're relatively equally balanced. So what I mean by that is the bars to the right-hand side show the markets that we are long in. So we're currently long in lean hogs, long cattle, long cocoa. And vice, the ones on the left-hand side show the markets that we are short in. So we're currently short palladium. Like I say, a brilliant move for us very recently. Short natural gas and short coffee. And some of the positions can stay on for decades. Now, what I mean by that is we may enter a position and we will roll on, so increase the size of that position over time. As the trend gets stronger, we will add more to that position. As the trend starts to weaken, we will remove part of that position. But there have been trends, palladium being one of them, that when it was applied back in 2013, it's rolled on and it's rolled off, but it's never been 100% off, meaning we've technically been in that trend for a decade. On the right-hand side, again, some key metrics for you as investors to understand that how we have sensitivity or non-correlation, showing that if the stock market drops by 1%, we would drop on average by only minus 0.38%. If the yield curve shifted by 10 basis points, we would actually increase by 1.01%. If energy prices rose by 1%, actually we would pretty much stay flat with a minor drop of minus 0.03. And then finally, if food prices rose by 1%, we actually would gain by 0.86%. And these are metrics that we monitor on a monthly basis. So finally, why invest in Bowmoor? And then, like I say, we'll discuss it. We'll open the floor to questions, etc. But why invest in Bowmoor Capital? Why us as an investment in your portfolio? Well, firstly, before I go on to this, we are where we found a home in a lot of investors' portfolio is as a hedge, as a percentage allocation to hedge potential other investments that you've got. Don't get me wrong, we've got some investors who have decided to use all of their investment capital into Bowmoor Capital, but where we are seeing significant movement is as that hedge, to have us in there as an element of crisis alpha. The managed accounts that we run, which are generally family offices, use us as a percentage allocation. That 2 million may be a 5% allocation of their overall investment horizon. But ultimately, why invest in Bowmoor Capital? Well, 6 points I feel can sum it up. And we start with number one, which is performance history. The question's already been asked there about the live track record, and yes, it is. And Global Alpha has a long history of consistently generating those returns for our investors over the medium to long term and outperforming not only our peer group, but also the wider market. We've got portfolio diversification. Global Alpha is a natural choice for investment portfolio diversification because it provides investors with exposure to a broad range of global markets, covering stock markets, interest rates, currencies, energies, metals, and other commodities in those 21 carefully selected markets, which do not change. Now, don't get me wrong, we can change them if we elected to do so and it went through the correct processes. If we wanted to change one of the currencies because there wasn't much movement and substitute it for another one, we could. If we wanted to substitute hogs for a Middle Eastern market, we could do so, which we have actually done in one of our managed accounts. So we can adapt subtly to certain different investor classifications. We've got reduced overall portfolio risk. Through diversification, Global Alpha offers our investors the potential for a lower overall volatility in a balanced investment portfolio. It complements other portfolios' traditional asset classes, with which Global Alpha has very little or very low long-term correlation. It performs independently of traditional stock and bond investments. Number four, performance during all economic environments. And I think this is something that people need to be a much wider and more aware of as we move into different and more uncertain global economic times. Because Global Alpha has got a history of performing well across different market conditions, including bull and bear markets and during times that are adverse for traditional asset classes. By taking those long and short futures positions, the strategy performs and performs from the trends in those rising and falling markets. Liquidity, I think, in the majority of investment strategies and investment types out there at the minute is very poor. Lock-in periods of months, if not years, provide limited flexibility for the investor. Now, don't get me wrong, we are a 3 to 5 year investment, but you do have the ability, if you wished, to de-invest anytime you wish. We're daily liquid. Now, like I say, and like you've seen with the returns, it's not encouraged. We encourage a 3 to 5 year investment horizon, as everybody should in their portfolio. But the ability to have that liquidity and the ability to offer that to our investors is critical. Because we, like I say, we only invest in those highly liquid futures markets traded on recognized international exchanges and priced daily. And finally is the team. We're a highly experienced team. We've got an experienced team who are not only passionate about the strategy and its development, but also focused on providing performance and value to our investors. And we've kept the team small, but very, very highly qualified for what we want to deliver. We've got aspirations for huge AUM, and we've got a pipeline of AUM growing well into the 9 and then the 10 figure mark. The strategy itself can handle up to 5 billion. So we're never limited. Well, I won't say never. I would like to see 5 billion one day, but we won't have to change any of the portfolio positions until we are approaching that figure, again, due to the size of those markets. So that isn't a concern. There is no concern that as we grow, performance will suffer due to bloated AUM. That's not the case with us because, once again, those carefully selected markets. The fund itself, we recently launched it as a formal Guernsey fund, so an offshore fund. It allows individuals from the Middle East or wherever we are globally to invest in an offshore structure. The fund itself went live on the 1st of September, and like I said, we've already discussed that AUM level. We partnered with Zeta Asset Management, who've got 4.2 billion assets under management. So even though our fund, is at the moment only in that 8-figure region for AUM, we are partnered with the investment manager, Zeta Asset Management, who have that 4.2 billion asset under management. Our administrator is as is tier 1, should we call it, as you can get in Northern Trust. They're one of the largest administrators in the world. Again, offering peace of mind to our investors that actually what they're investing in isn't just a regulated fund, but also that we've got tier 1 counterparties on our side. So Northern Trust being the administrator and the custodian, with RJ O'Brien being our prime broker and an auditor being Ernst Young in London. We're daily dealing, like I've said, and we are, and that is based on GMT or Guernsey time. And our minimum investment is as low as 1,000 USD, euros, or GBP. That concludes what I have to say as a formal presentation. And what I'll do is I'll stop sharing now. I believe I've already been stopped sharing. And Simon, I'll allow you to host any questions, put anything to me, and I'll do my best to answer them and explain a little bit more about anything anybody wants to understand.
Yeah, I'm sorry, Richard. I think I pressed the wrong button and I unshared your presentation just 2 minutes ago. But I'm sorry for that. No, it was fantastic, your explanation, and I think all the slides except the last slide were visible. I do have quite a lot of questions for you.
Okay.
I also have some questions for the audience, because if you're going to ask us questions, you can expect us to ask you questions back. So I'm going to launch some polls right now. Please just answer. The first question is, have you invested in the stock market? Just for us to have an idea if we are dealing here with people that have invested before. Okay, and Paul, yeah, everybody has invested in the stock market 100%. Now, the next one I want to ask is, I want to know about how much money people are making. Are you making like around 20% a year with your investment and strategy, or are you making more or less? Just let us know. This is anonymous. I'm not gonna like single out like, hey, you're making too much money or you're not making enough money. Just for us to have an idea. Okay, so 100% of the people saying that they're not making this type of return. That is fine. And the next poll is, before we go to the questions, obviously, maybe based on the questions, you might vote differently, but do you think this could be of interest for you? Just, general interest, just, we're not saying you should invest, we're just saying interest. 100% is saying that this could be of interest. That's good. So I'm going to dive into the questions because we have quite a lot for you, Richard. You're a lucky man today.
I'm ready when you are.
Yeah. Okay, here we go. So what is the Sharpe ratio? I answered to that 0.94. And then I got a follow-up question. Why is 0.94? It's very low.
Mm. Yes, yes, it is. And but it's again, you've got to look in the field. It's very low because of the volatility we have. We're a 20 vol product now, and that's very important to understand. That is the strategy itself is a 20 vol product. It's actually very high compared to our peers in the managed futures and the CTA space. But ultimately, it's due to our level of volatility that we have. So it's important for investors to understand that, and that's why it's also important for investors to look at it with the correct time horizon of that 3 to 5 years. We do have negative months. We're very open and honest about that, with displaying not only our annualized or our annual returns, but also on a month by month basis. And returns on a month can. This month is a perfectly good example. We were plus 5% this month alone until around the 15th of the month. Then we had a sharp reversal it was again the palladium market, and actually we're now flat on this month. So those movements are volatile. So yes, we do have daily liquidity. Yes, we are priced daily, and a price can be tracked on the likes of Bloomberg. It is important to have that longer term horizon, but that's ultimately why the Sharp is where it is, because of the volatility of the product.
Excellent, excellent. Another question is, you can't compare returns without controlling volatility/leverage. So I think the question will be, how do you guys control your leverage?
We're unleveraged. We have
Okay,
zero. Yeah.
that's
So we have
that's very
zero.
clear.
We are an unleveraged product. So again, we can compare to any other indices or benchmark because we are not leveraged.
So if you're only investing around 30% of the client's money and you're still making like 20 to 30% a year, then you're really performing very well if you're not leveraging.
Exactly. We are totally unleveraged on it. But that's the nature of the futures market, where the remainder of the capital is on account for margin. Now, actually, a very good point. Let me just discuss that. So the 21 markets, from that, a significant portion, circa 75%, sits in cash for margin. Now, we are unleveraged. I'll sort of reiterate that once again. But the cash sits there for margin. Now, the returns I've shown you up until pretty much the last month, those monthly returns we were in a zero interest rate environment. So actually the cash was sat there doing nothing. But it's not as if the investor couldn't put it on give it to us. They invest £1 million. How we invest it, out of that million, 750,000 would sit in cash. The remaining 25 would be invested in the futures markets at a very strategic amounts and sizing. Now, those returns for the past 10 years, we've been in a zero interest rate environment. Well, now, actually, that cash deposit, we're getting 5% on. So what I'm saying here is actually our returns over the next period should actually outperform what they've done prior, because we're now getting a notional interest, 5% on the cash balance, which we've never seen before. Yeah, but again, unleveraged product. We can
Very
leverage.
good.
So we can leverage, and we have leveraged to 2 to 1, where we will double the amount invested. So instead of holding 75% in cash with 25% invested, we'll invest 50%, okay, for that investor. What do they get from that? Double returns, double volatility. We've only done that in a managed account, and we would only do it in managed accounts for clients of a sufficient size and a sufficient understanding of what they're investing. It's not our main offshore offering, because the offshore offering is restricted to a 20% volatility. It allows the regulation by not only the FCA in the UK, but also the GFSC, so the Guernsey Financial Authority as well. So we've got that dual regulation. But like I say, that element isn't unleveraged.
Okay. I have another question for you. Is there a public ticker/audited fund and net asset value that we can check?
Yeah, so all share classes. So we currently have 7 share classes, and they're all visible on Bloomberg. What is the ticker on Bloomberg? It's quite what would probably be easier, Simon, if I send you a list of the hyperlinks for Bloomberg, and you can share them, because that gives the daily net asset value of the relevant share classes. Now, the share classes come with different fee structures. So let me briefly touch on that. We've got 7 share classes, A, B, C, and so on and so forth, covering euros, GBP, US dollar. And they will either have some of them will be a 0% management fee and a performance fee. Some of them will be a 1% managed fee. So 1 in 20, 0, 30. So it allows an investor to look at it and think, do you know what? I'm comfortable going 0, 30, because for me, if they're not making money in the fund, then actually as a company, they're not making money. And some investors like that. But what that does mean is you pay a bit more away in your performance, 0, 30. Some investors, 1 in 20, actually, if you are in for the long term, you will make more money on 1 in 20, so only paying away the 20% performance fee than you would on 0, 30. But it's a very much an investor's decision. Now, all of those share classes are visible on Bloomberg. All of the NAVs are visible there. But like I say, let me send you the hyperlinks for them, and each one of them is displayed slightly differently.
Okay, great. And somebody else is asking that this is very interesting. Thank you. Any investment in crypto? Any exposure?
None. No, we don't. And again, we've looked at it. And potentially we will in time. I'm very keen, as is Gareth, the fund manager, to launch a boutique offering. So our main offering, Global Alpha. So Global Alpha as a strategy could be run on any markets, 21 of anything. And we've ran it and we've back tested it on 21 crypto markets. And the returns are astronomical. Because ultimately we're not investing in the product. We're not investing in Bitcoin because we think Bitcoin's going to go up. We're investing in Bitcoin, for instance, because it may have shown a significant trend. And crypto trends exceptionally well when it does so. So we've looked at it, potentially removing one of the currencies from it and replacing it with a crypto element to try and have that as an offering. Or in time, we may do a boutique offering. And what I mean by that is less liquid futures market. So have some crypto exposure in there. Have some of the less liquid futures markets, the likes of lumber, the likes of orange juice. They're futures markets, but with less liquidity. Now, that fund, if we did it, would be limited in size, probably, let's call it to say 50 million rather than 5 billion, but it would offer an investor a far greater return, but also far greater volatility. So it's almost your risk appetite to that. But we don't offer that at the minute. It is something we're looking at. And yeah, we have looked at crypto. Crypto trends brilliantly, but it's the liquidity in crypto is 90% of the time there, but we'd have to be very careful at how big the fund got in order to give our investors the liquidity to allow daily liquidity.
Yeah, got it. It's very interesting that you touch base on that, and maybe we can follow up on this with future webinar, and who knows, there will be some developments on this. I got 2 more questions for you. What is the minimum amount and any lock-in period?
So I think I answered that. So the minimum amount is 1,000. Now, we don't encourage investors to put 1,000 in because the process involved in getting there. However, the formal minimum is 1,000. Lock-in periods, no, there's not. There are no lock-in periods. The administrative process to get money into the fund takes around 3 days, and the administrative process to get it out takes around 3 days. But there are no lock-in periods. You would, if you wish to redeem, so sell your investment, you would sell it at the daily NAV, the NAV, which is published. That's the price you would get. And then, like I say, it's simply an administrative process to return funds to you through Northern Trust, our administrator.
Yeah. And I also have a question for you, Richard. Could you please touch base on that? You guys also managed to make some changes when it comes to the regulation. Some of the funds also, compared to a couple of years ago, now also are registered, right?
Yeah, not as such. Where in regulation wise, a lot is being changed. When it comes to UK investors. versus offshore investors, they have to be marketed to slightly differently. Hence why we brought on a general counsel for that. So we are, within the UK, an elective professional product only, meaning that we can only market to professional investors. However, the fund has no restriction on retail investors. So for instance, if you had a client in the Middle East, in Dubai or wherever, they could happily invest within the fund. Even if they were a UK expat, we would just have to market to them correctly. Now, it's a minefield, anybody who's dealt with the UK regulatory system, and hence why we employed a full-time general counsel, because offshore marketing is completely different to UK-based marketing. But as we are a London-based fund, we have to bow down to the regulator. I wouldn't necessarily say it's changed. Well, some of the regulation has changed, but it shouldn't affect any of your investors or those people on this webinar.
Yeah, fantastic, Richard. Thank you so much. And I always like it when there's a lot of questions. It makes people engaged, and also people learn more. I learned from this webinar as well. So maybe is there something that people did not ask you that you think you want to share?
Yeah. What I would say is, with this type of strategy, and what I would share is, there aren't many products out there that can turn £1 into £1.23 on average in a bull and a bear market consistently. And think about that. You're turning £1, or call it £100, £1,000, or whatever multiple, into £1.23, 123, etc., etc., in whatever market conditions, because we're not buying a single hyped product a year. We're not buying into AI, which is booming this year, but who knows where it'll be next. We're following the trends of the market, trends which have been proven by human biases to be consistent throughout time, and there's a lot of data to support that. What I would say is, if people want to know more, please go to the website, which is bowmoorcapital.com. Bowmoor, Bowmoor, obviously, as it says on the slide here, capital.com, where you can reach me directly at the email address on the bottom of the page. And by all means, ask any questions that you wish, or directly through Simon, who has all of our, I believe, up-to-date marketing documentation and is more than happy to share that with you. But any other questions, by all means, come and ask me directly, and I'll do my best to answer them.
Yes, and also Richard also does client calls. So if you want to also have questions and you want to jump on a client call, that's also possible, which I think is a great USP. So, thank you, Richard, for taking your time to share this with us and to present. It was really helpful. Thank you so much.
Fantastic. No worries. And as I said, please, I could offer a little bit of value, and hope the audience, those that are here today and those who watch it subsequently, can not only gain a little bit of information about Bowmoor and why we are, or we should, play a role in everybody's investment portfolio, but also a little bit more about the power of managed futures and the power of trend, the power of actually just follow the trend in a market, because human behavior has shown over time that they will continue until they change, and then we'll simply play as an opposing trade on the downwards trend, or vice versa, the upwards trend.
Well said. And if you want to have an awesome return, all you need is exposure to Global Alpha Fund. Here you see now why. For the people watching the recording, you understand why. So again, thank you so much, Richard, for joining and for taking your time.
No worries at all. Thank you, Simon. Thank you for having me.
And for everybody watching and for everybody watching the recording, thank you for taking the time to watch this. Have a lovely day, and hope to connect with you soon again. Thank you. Thank you again, Richard. Bye-bye, everybody.